welcome to the weekly market wrap-up. I'm Hannah Bernard. Markets on both sides of the border are bloodied and bruised after taking a beating this week. Thursday marked the fifth straight day of losses as the major indices bounced from losses to gains and then finally back to losses again. All of the major benchmarks are now well into the red for the year. How bad was the skid? Let's find out. U.S. stocks continue to blaze a volatile path on Thursday due in part to the shocking announcement by the Swiss bank that it's abandoning its currency peg against the euro. The Dow Jones Industrial Average dropped 106 points on Thursday to close at 17,320, down 3% for the week. Finance and energy stocks hit the S&P 500 the hardest, which slumped 18 points to close Thursday at 1,992, down 3.3% overall for the week. And the Nasdaq also continued its slide, losing 68.5 points Thursday, down 3.5% overall for the week. Now let's turn to Canadian markets, which had looked to post gains Thursday only to U-turn into a loss. The Toronto Stock Exchange gave up 42.61 points Thursday as energy shares and oil prices retreated. The TSX closed at 14,041, down 3% overall for the week. The TSX Venture Exchange almost posted in the green on Thursday, but ended down just 0.45 to close at 659.24. The TSX Venture is down almost 4% overall for the week. Some big companies delivered bad news this week. The biggest by far was the news that Target Corp will abandon its operations in Canada, pulling out after less than 2 years and racking up over $2 billion in losses. The Minneapolis-based retailer never found its footing in Canada as the company's 133 stores were plagued by empty shelves and prices being higher than locations in the U.S. Target Corp said it would exit Canada in a fair and orderly manner, providing 16 weeks of payments and benefits to the estimated 17,600 employees who will lose their jobs. While bad news for workers, it was good news for stockholders as company shares bounced Thursday, following the news up $1.80 to close at $75.67. And the closures don't stop there. Sony Corp also delivered a surprise this week, announcing it will close all 14 of its Sony retail stores across Canada as the company continues to struggle to reshape its business. The company made the announcement on Thursday in a memo to store employees. Sony did not say how many jobs are affected by the decision, but did indicate all stores will be closed within the next 6 to 8 weeks. Bombardier was a major drag on the TSX as its stock tumbled almost 26% after announcing it would write down the value of its Learjet 85 program, resulting in a pre-tax charge of about $1.4 billion US in its fourth quarter. Bombardier announced it's cutting about 1,000 jobs in Mexico and the US due to weak demand for the business jet. Now to winners and losers and our picks for the week. The winner for this week is Techmira Pharmaceuticals, ticker symbol TKMR. Techmira shares jumped $10.59 or 56.2% on Monday after the Vancouver-based company announced a friendly merger proposal with Encore Biopharma Inc. The deal would create a publicly traded company worth about $750 million US. Techmira Pharmaceuticals focuses on developing RNAi therapeutic technologies. It has developed an advanced Ebola virus treatment and specializes in products for treating hepatitis B. And the loser for this week is Bitcoin, exchange symbol Bitstamp USD. The price of Bitcoin was hammered this week, dropping 22% on Wednesday, which followed a 15% drop on Tuesday. The notoriously volatile digital currency, which topped out at $1,150 in 2013, dipped as low as $170 this week and is down 40% overall for 2015. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Tuesday is Netflix Inc. with an EPS forecast of 44 cents compared to 79 cents in the prior year quarter. Netflix won big at this month's Golden Globes as House of Cards and Orange is the New Black won awards. Netflix needed some good news as its shares have dropped over $23 since January 2nd. Next up on Wednesday is eBay Inc. with an EPS forecast of 78 cents compared to 71 cents in the prior year quarter. Finally, on Thursday is Starbucks Corp. With an EPS forecast of 80 cents compared to 71 cents in the prior year quarter. And now here are 2 Canadian stocks to watch next week. First up on Tuesday is Celestica Inc. with an EPS forecast of 24 cents, identical to the prior year quarter. Finally, on Thursday is Canadian Pacific Railway Limited with an EPS forecast of $2.56 compared to $1.91 in the prior year quarter. CP's stock is staging a recovery after declining oil prices late last year took a bite out of share value. Most analysts expect nearly all railroads to post strong fourth quarter profit gains in the coming weeks. And that wraps it up. Thanks again so much for joining us for another weekly market wrap up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Vital Network News and Baystreet.ca, I'm Hannah Bernard.